Good afternoon, everybody, and good afternoon, everybody who's joined us online. First of all, welcome to this MGAA Open Door session with Matt Brewis of the FCAA. Just before we get started, I'd like to highlight a membership thing, please, if I may. So firstly, for our annual conference, all of our awards portal is open and is available for awards submissions. Those awards will be sort of awarded and presented at our annual conference. So for all members on the call, please ensure that you submit your award submissions for showcasing your business and just as importantly, certainly any rising stars you have in your business. So we know how important it is to sort of generate new talent coming into our industry. So that's a message from me, from the MGAA. Now to today's event. It's an absolute pleasure to welcome Matt, Director of Insurance from the FCA, to answer your questions. We have a reasonable period of time, so please, no one be shy, both sort of in the room and online. Let's take and maximise the opportunity for the time that Matt has given us. I have shared with Matt some pre-submitted member questions, which we will start with. But first and foremost, Matt will do an introduction. For those of you online, please submit any questions via the chat button and I will look to pick those up as we go through the session. And as always, any questions that we are unable to answer due to time, then we, the association, will pick that up with Matt and his team post-event. So without any further ado, please give your appreciation for Matt. And welcome Matt to the stage. Thank you very much. You stand there.
Thanks. Hi everyone. Thank you very much for having me along, Mike. Thank you very much for the invitation. I really enjoyed doing this last year, and so it's good to do it again. I thought just to start, I'll talk a bit about the FCA strategy just for 5 minutes or so, because I think a lot of how questions that might come up about what the FCA are doing, what our insurance focus is going to be, all kind of will stem from our new strategy that was launched last month. So our new strategy, it's a 5-year one, aim is to last to 2030, has 4 main aspects to it. One is assisting growth, the second is fighting crime, third is helping consumers, and the fourth is being an effective regulator. And all of those simple enough that even I can remember them without looking at my notes. So just to go through each of them and what they mean for insurance and how we're thinking about those. So firstly, empowering, enabling growth. One of the things that we're really keen to do is help businesses succeed in the UK. The Prime Minister wrote to us, as well as many other regulators, on Christmas Eve to say, hey, what are you doing to help growth in the economy? And one of the things that really we think the FCA and we have in the UK more broadly is a strong regulatory foundation. But what's really important is to ensure that that doesn't impinge on growth and stop firms who want to grow from doing so. So we've been looking at what it is that we can do to simplify different parts of our activities. So imaginatively, next month we'll be publishing a document called Simplifying Insurance. And that will focus on a number of issues that we've heard from from insurers, from brokers, about issues that aren't working for you that effectively, and where we think they're not doing exactly what it was that we intended. So for example, fair value assessments. I know it's been an area that for many firms has been a very difficult process, and it's been one that's generated lots of paperwork. Our aim throughout all of it has been to ensure that all products do offer fair value, and that by firms looking at their products and thinking about, is this meeting the needs of the customer, are they able to make use of the product, etc. All of the and they're supported through the journey, all of those consumer duty aspects, by doing that well, it would mean that products would become better. I still think that they can provide real value, but we're going to consult on removing the requirement to them annually, which we have at the moment, and moving it to when there's a significant change in the product, which will reduce a significant amount of pressure on compliance departments and also our printers and other areas where firms are putting lots of effort. I think the other really significant part of that is last year we did a discussion paper around what is consumer business, what is wholesale business, and where is it that we should ensure that the consumer duty protects people, and where should we say, actually these people are sophisticated firms and therefore don't require the protection of the consumer duty effectively. And again, next month we'll be publishing a consultation paper that will kind of try and have a bright line to say, below this level, you and I are protected by the consumer duty and should have the, where you have access to the financial ombudsman or the FSCS and protected by all of those rules, but actually anything above that, that is no longer required because people are sophisticated enough to not need it. And we think that will make a significant difference for firms being able to be clear as to what should be covered, what is consumer business, what isn't. And we'll be consulting on that with an aim of later this year introducing rules around that. And we're on the lookout for what are other things that we can do. So any ideas you have of where anything from regulatory reporting, where there's duplicative, what you regard as unnecessary, or where reporting, we're looking at where it is we can make it easier for firms and without having a detrimental impact on our statutory objectives, making markets work well and protecting consumers. Authorizations, which has long been an area of kind of concerns around delays and making it harder for people to get authorized. As of Monday this week, My FCA was launched, which was a new system looking at to make it easier for firms to get authorized, more intuitive design. And already feedback around that has been positive. So we're looking at all the areas of how we can innovate and make it easier for firms to set up in the UK, and once they are here, to be regulated effectively. 2 years ago we published, so effective regulation, being an effective regulator, effective regulation. 2 years ago we published an insurance strategy, the work plan that we'd have for the next 2 years. That's coming to an end, and we've pretty much done everything that was on that list of things that we were going to focus on. And so we're beginning to think about what will be on that list next time round, and we'll be looking to publish that in the autumn. I think what you can expect to see from that is a focus on on all of those aspects, how we can assist in fighting crime with our capes. But in insurance, it's an issue that's been more, industry has had a significant lead on, and we're looking to how we can support industry in other areas where there is more that the FCA can do to help. I think you can expect us to be focusing on embedding the consumer duty, publishing best practice guidance on what we're seeing work well, as opposed to new rules, and instead focusing on where there is this duplication of when it comes to regulatory returns, or where there are rules that are no longer necessary. An example somebody gave to me the other day was around gap insurance. So if we go back a decade, the FCA did a big piece of work around gap insurance and introduced a whole load of new rules that would solve some of the issues we saw with how the product was being sold in motor dealerships. Actually, what happened was businesses innovated around those rules to a point that meant when we looked at the product under consumer duty last year, actually there were still really significant concerns that we had with the product, and we took action to stop it being sold or redesign how it was sold. all of which meant we can rely on the consumer duty to make those changes, as opposed to having pages in our rulebook. So we're considering wherever they're parts we can take out, and so that we can reduce the reliance or need to have much more detailed rules in our book and introducing more rules. Those are the main things I was going to say about the strategy. There's right now we're still iterating it. We're just I'm using all the words: iterating, socializing, talking about what we're aiming to focus on as part of this, but also getting input from you and doing events like this to understand what are those areas that are around growth, around helping consumers, where we can do more to be an effective regulator and fight economic crime. Where are those things that we can do more to assist? And as we go through the next 50 minutes or so, would very much welcome your thoughts and questions as we go through. So thank you very much.
Thank you, Matt. Okay, so let's kick off. Yeah, sure. Let's kick off with one of the first questions. So this actually relates to vulnerable customers, and it's actually through the lens of MGAs. So what are the expectations of a firm, i.e. MGA, being part of the value chain, who does not have direct clients, i.e. those clients belong to brokers, in how we monitor vulnerable customers, as there is only so much information you can get based on claims data, broker feedback, capacity, etc., etc. So we are monitoring and receiving limited data. However, what else could we do to ensure no harm to vulnerable customers? So I think it's clear that the MGA being slightly removed, what's your sense on that?
Yeah, thank you. I mean, firms can only do what they can do, right? Based on what information they have from their customers, what information they have from other parts of the distribution chain. So my expectation is you focus on outcome here. So if you become aware of issues elsewhere in the chain that's coming to you via the claims process or some other route, and there's things that can be done in your part of the chain to deal with whatever that harm might be, you should deal with it. If you become aware of issues that are to deal with the broker or the capacity provider or any other part of the chain, then there's a role for, I think, the MGA to talk to whoever that part of the distribution chain is, so that they can make changes to it. Everyone needs to play their part in it, but it doesn't require duplication or you to do the job of other parts of the distribution chain.
I think that helps insofar that you can only really do as an MGA what you can do within your remit, as opposed to being asked to overstretch, which I think there has been some examples from members when they've been asked by Capital to overstretch and try and get some of this information, which clearly, these clients are brokers' clients, and sometimes that information is just not forthcoming. So I think it's, stick to your lane as best as you can, I think. Yeah. Okay. Any comments from the room on that? Or yeah.
The good point is what is the managing agent's expectation from that point of view? Because you may say I can't overstretch, but is the managing agent expecting you to overstretch and then find out the information?
So we don't want overlap and don't want underlap, right? So having a clear agreement as to who is responsible for what part. If you're responsible for the claims handling of a claim, for example, understand it, and here we're obviously talking retail business, given vulnerable customers. So understanding if you're doing claims handling, you need to know whether or not that customer is vulnerable or not, because you're the one who's interacting with them. If it's the broker, then they're the one that needs to know and to act on that. So again, it depends on your role in it and whoever it is that's doing the interaction to know and therefore act on the vulnerability. So have an agreement between all parties as to who's doing what part of the chain is the important bit.
Okay, I'll move on to the next question, which is something the association has been in dialogue with Matt and his team, which is around non-admitted capacity. So question, Matt, could you please expand on the recent FCA engagement with members around the use of non-admitted capacity? There's an understanding a number of VREGs have already been applied to members. So is this an indication of a wider review coming? A summary of the approach to date and future plans would be appreciated.
Okay. So this is one of those really tricky issues. So if you're onshore in the UK selling insurance, you need to be authorised and regulated by the PRA and by us, right? That's the rule. Yep. If an insurer is coming in from a place where there isn't equivalence and it's not regulated over here in the UK, and so they're not admitted to sell products in this market, retail consumers do not have access to the levels of consumer protection via the Ombudsman or the FSCS that they would have if they were. That's my fundamental issue. I slightly care less about it when it's wholesale insurance. And if there's a world in which a product can only be purchased from a certain island somewhere in the Atlantic or anywhere else, for example, and it was made really, really clear to the consumer buying the product, by the way, if you buy this, there's no protection, you have no complaints, you have no FSCS if anything goes wrong with this, that would probably be okay as well. My concern is there are products being sold in latent defect insurance and other things like that, which are impacting many, many consumers in the UK, where they don't understand that they don't have the level of protection that they think that they do. And so where we're seeing issues impacting retail consumer, well, just people, and generally at the moment it seems to be coming up in issues like latent defect insurance and long tail type products. Those are the ones where we're seeing concerns, or where we have concerns. We think our rules are quite clear around this already, but they could probably do some clarification. At the moment, we start trying to decide how big an issue it is, how big a concern it is, if there are things that need to be done. I mean, in the context of what I was talking about before in terms of our strategy, this is a relatively niche area, and introducing new sets of rules at the moment and around these things and doing a big piece of work on this is unlikely. But we're looking at how we can, if there are areas that would be helpful for us to clarify what it is we can do to clarify, we will. But so having your questions as to what it is of concern is kind of the helpful part.
Kenneth?
Kenneth, you promised no difficult questions.
No, it does relate to this point. So you mentioned that you're not too concerned about if it was non-consumer business that was going offshore. Does that mean that you would potentially actually look at a change to the rules? Because the rules are embedded in the Regulator Activities Order, which is, of course, a piece of legislation.
Yeah.
So it takes more than just yourself or the FCA to change the rules. But I think it is quite important that there is something a bit clearer, and I think you even acknowledged that's the case. Would it be likely that that was the sort of divide, so you have a dichotomy between wholesale, that's okay because there are no consumers, and consumer business? Is that where we're headed?
Yeah, I mean, like you say, it is in legislation, right? So at the moment, where we're looking at when we're focusing on all of the things that I've said around the consumer duty, and we're trying to be clear, when it's consumers, you get the full level of protection of the Ombudsman, the FSCS, the consumer duty. Where it's wholesale business, you're deemed to understand what you're getting yourself in for. It might seem to fall on that side of the line of things where it's less of a concern, like it's more for firms to deal with. But I don't have a really clear answer for you yet as to how big the harm is. That's what we're trying to work out. Yeah.
If we stick with that dichotomy and go back to what you were saying about the consultation paper that's coming out, the consumer piece, the consumer duty piece, applies to the consumers. You then have, sitting next to that, product governance. And product governance goes beyond the consumers into the wholesale market as well. Do you see that there could be changes coming for product governance in relation to wholesale business, so that we really are starting to see a sort of a broader gap between the rules that apply for wholesale and the rules that apply for retail?
Yeah, I think so. I mean, the way I'm looking at it as a kind of philosophy around that is saying, with our statutory objectives of making markets work well, that's what we're talking about with the wholesale business. So how do we make it easier? Actually, our insurance sector is a really significant exporter, and business kind of coming into the UK. How is it we can help the London market and Lloyd's be successful in that way without throwing the baby out of the bathwater in some ways, but also ensuring that we have a level playing field, but we don't have levels of regulation that are not necessary. And that's where I think having that distinction between retail and wholesale is kind of quite important.
Coming back to latent defects, where there's such a constrained capacity in the market, reducing customer choice, how do you balance off those two elements?
Yeah, that's a good question. But if the only way of providing it is from something that is outside of our rules, then there's something not working in the market. So either, is it because the product can't be provided in the UK for some reason? Is it because it's too expensive to provide it? And how do we provide it when we're talking very long term, in some cases very long term insurance? I think this is one of those areas where the market isn't working in a way that in a way that we need it to. And it's as with many issues with buildings, it's one of the is deeply complex and tied up with many unregulated things as well. But I don't think that means the answer is it should be done by a company outside of the regulatory world, where consumers have no comeback if that firm isn't there anymore. So we need to find a way of ensuring that product is available in the UK.
This has been quite a sort of, a regular topic between us, our members, and Matt and his team. Is any other observations or questions or direction of travel, or you satisfied in terms of Matt's sort of current scenario? David?
So I would also be interested in anyone who's got any ideas on how we do solve this issue.
That's a fair point.
Well, it's a very complex area. One thing I will comment is that for my sins, I lived through 20 years of the Insurance Companies Act and litigation under that about what was and what wasn't allowed. The FCA introduced rules that actually then cut across 20 years of litigation and made it far stricter. So if you went back to the pre-rules, and you would know exactly what the law is. Now we don't know what the law is. You are the law, you've overridden the law, so that's one thing that should be thought about. You've taken it further than we ever did in the courts, right up to the House of Lords all those years ago. What I would say is that the problem with regard to the latent defect stuff, I don't know that particular market. It's a difficult market. Claims take 7 to 10 years to come through. But the Americans have had surplus lines and excess lines for 30, 40, 50 years. We've made a whole market of it here in London on that thing. Why can't we adopt that sort of approach? It's worked for the Americans. Why can't? I'm not saying everything works in America today, but that's controversial, of course, especially if there's a tariff on insurance premiums going forward. But that sort of idea, excess surplus lines, is not a bad one for us to adopt. I'm not a great advocate of consumer business going offshore, I must say, because I can't see that that helps. But if it's better to have some insurance on that sort of basis than no insurance, well, then okay, I suppose we can sort of swallow that. I am a big advocate, though, and I'm pleased to hear that you're consulting on the difference. I'm sure the members here will be, because the difference between doing retail consumer business and wholesale commercial business is stark, and the two should not be mixed. There are 120 different classes of insurance, I'm told, and there's 110 different types of motor policies, I'm told. But don't think the motor is like life, it's like marine, it's like aviation and all the rest of it. And why reinsurance falls into this, I've never understood. Why we've got the distinction on large risks, which is inherited from the EU. Well, the broker can do it, but the insurer can't. That's just nonsense to me. I'm sorry, I just don't get that. That's how we've got a set of regulations that work like that. I do not understand. I just think there's a lot of clarification he's doing, but I'll be interested to see what the consultation paper is, and I'm absolutely certain that the MGA will be, Ken and I will be scripting something quite strong to come back on behalf of the MGAA. So please feel free. That's great. But I would just say, sorry, we have been introduced, Matt, but I chair the Legal and Compliance Committee, so I get it in the ear from more than most. But there's some ridiculous examples, like dealing with complete non-UK risks, in fact, not even in Europe risks. Our expertise is here, but we've had to stop dealing with them. And that's nonsense. We're actually pushing the brains out of the country because they can't do it here. So I just think that we've got to think about this a lot, and we need to do it quite quickly. What you've introduced, I'm not saying is wrong, because that's what you would think is the law, and that's fine. But the point is, we are pushing this out today, and I heard from senior broker in the market that it could be as much as £9 billion of premiums could technically fall within this net. Now, I don't want to see that all disappear out of the UK, but it's a case of if some of that disappears, that's not going to be good for us, because the brains will follow with that, and that's what we don't want to lose. We don't want the technical expertise to go across the channel into Europe. That would be a disaster for us all, or get to Bermuda more likely, actually, in many of the cases.
Mm-hmm. Yeah, no, thank you for that. I mean, I think there's quite a few points there. I mean, in terms of excess lines business or surplus lines, I'd be interested with any thoughts on how that could work. I mean, I think we'd love to have this business here, right? This is, if it's an area where we could expand and do more in the UK, then great. It's the consumer business that we're kind of focused on, but anything we can do to attract more insurance into it. Sorry, let me try. I have been told by a number of insurers, for example, that they'd stopped writing certain business because they felt it would be sold, some of it might be sold into retail lines, and therefore they would be caught by parts of consumer duty, and they didn't want to, and so they pulled out of certain business lines in order to ensure that they were clean of the consumer duty, because they wanted to just deal with wholesale clients, and that's part of the rationale behind this, of having this clearer line and saying it's based on who the customer is and the kind of the S of SMEs, and is to make it really clear, and so hopefully it will lead to a greater level of certainty for firms as to what they can do here. I mean, in terms of my team are enforcing the rules as they are today when it comes to
VREGs.
The VREGs, and yeah, exactly, and overseas insurers that are operating here without a license. It's not simple, and we need, I think one of the things we're trying to do at the moment is find a way of being able to talk about it authoritatively, and so we can consult on or get views on what the appropriate outcome is and understand how it works in the market. Or at the moment, what I get is letters from MPs about houses and blocks of flats and whatever where people are finding themselves with really significant bills or unable to sell their houses because the latent defect insurance that they had isn't coming through for them, because the insurers have disappeared and there's no recourse to any other scheme. So we have our rules at the moment, and we're applying those. How we can make them more effective and clearer for firms, because I don't believe firms are seeking to subvert rules in this way. It's just it's a very complex part of our regulation, and we need to make it simpler. But some of that is outside of our control.
Okay, so I think, good debate on that. I think the message sort of we can take away as an association is that, as Matt's offered, that if we and our members have some ideas in terms of how we can assist that, then that's up for us to present that to Matt and his team. So we'll take that away as an opportunity and an action from there. Okay, so moving on now under a heading of regulation general and cutting red tape. Next question is, regards to insurance intermediation, what is the FCA doing or considering doing that will remove unnecessary, ineffective or overly burdensome regulation? For example, deep diving into areas of the insurance market which may represent poor value, e.g. gap, which you did cover, rather than imposing obligations across the whole industry. And secondly, scrapping product distributor, manufacturer stroke co-manufacturer structure for non-retail business, as this isn't how wholesale works. So.
Yeah, no, that's a good one. So I've covered a bit of that already. I mean, I think one of the other areas we're looking at doing is when it comes to fair value assessments, where it's a lead follow model, we only need to do one fair value assessment as opposed to everybody having to do one along the way as well. So we're looking at those areas that we are hearing. All of those are things that I've heard a number of times, where we're looking at how we can make that more easy to do. I mean, I still see a really significant value in fair value assessments, as I said a few minutes ago. But and I think what you'll see from us over the next 5 years as part of this strategy is more, look, this part of the market isn't working, or this particular product isn't working, as opposed to blanket rules. The consumer duty is our aim of having these high-level principles, an outcome-focused regime that makes conduct supervision kind of clearer. We'll publish best practice. We'll say that here's some stuff that we've seen that we like, here's some stuff that we've seen that we are less keen on. But the aim will be, I think, to focus more on kind of individual interventions around certain products where there are concerns, and we'll do that by as we did with GAP and through our value measures work, is say, hey, there's this product over here that we have some concerns about. Please, if you sell, manufacture, distribute it, have a look to see if you think it works. And these are our concerns. But where we see a lack of progress or any real progress, that's where we'll have to intervene. And that was the case with GAP, for example. We talked about that for at least 2 years before taking action around it. And it's really important for us that we're seen as predictable, which is why the portfolio letters and anything that we do, we signal as much as we can, as in advance as we can, that this is this is the direction that we're moving in, to reduce that any kind of sense of randomness.
Can I pivot back on that? So I think it's very encouraging to hear that it will be more specific as opposed to that blanket, to use your words. What would underpin that is obviously data to identify. Do you feel that moving into that more specific as opposed to the blanket, that you have enough access to the data to identify areas which are not perhaps not working as they should be, or do you see that you may have to go to the market and ask for more data in order to be more specific in identifying those individual areas?
That's a good question, Mike.
I come up with one a year. So
yeah, exactly. It's a good one. Well, do you know, I have an offer for you. I'd be very happy if the MGAA wanted to have a round table or some event where we can talk about what are the returns that are the biggest pain for your firms to complete, but also and we can talk about what are the things that we need, how can we make it better. We're doing this with the insurers and brokers as well. That's the aim, because I know there are certain ones that are really painful, and there are certain parts that we must, we need to understand certain aspects of your business. But there are other bits that we can get from elsewhere, false complaints data and Companies House and other pieces, and we have lots of ways of ingesting data from that's out there. But firm-specific stuff, there will always be some stuff that only you can provide to us that we need in order to effectively do our jobs. And so, working out how we can do that most effectively, whether or not that might mean, for example, less regular reporting, more ad hoc reporting. So I'd always assumed, this is one of the things I've learned over the last 6 months or so, I'd always assumed it was easier for you guys to provide the same report like every 6 months than it was to deal with an ad hoc one that came in every year, say. Apparently for many firms it's the other way around. It's easier to do an ad hoc report than regular reporting. So we want to do things that make your life easier, but equally still give us the information that we need. And that's the sweet spot that we're trying to find.
Well, we'll take that opportunity. Absolutely, we'll capture that. It's a great opportunity for us. Any observations either online or from the floor on that particular topic?
I know the financial resilience one is the one that everyone in MGA and broker space is most kind of concerned about. So that's one that's on the list of ones that we're looking very carefully at, and what information is in it that we most.
Okay. I have a quick sort of comment from someone online. So MGAs that don't directly interact with customers. Our member has sort of noted the reference proportionality in such instances. Just the natural question: could you expand on proportionality for those that don't directly interact? So I think it was the previous question around. Well, we talked about staying in the particular lane that you can't overreach. I know we had a question on the floor. I just wondered whether there is any guidelines around what proportionality sort of is defined. I would expect one of the things where smaller firms, for example, give more guidance to what it is our expectations are of them, whether that comes to how you complete certain regulatory returns, how that comes to the level, the volume that we expect from them compared to the largest firms in the market, that we have a different level of expectation, and that customers, irrespective of who they deal with, should get a good level of service, right? Yeah. So that's not to say if a small firm, we should expect that they will provide a worse service. In fact, they'll provide a more bespoke and generally a better service. So, but in terms of what our expectations of regulator are on the provision of stuff to us, for example, and what our expectations are of the how much interaction they have with us, that's where you'd expect, where we're talking about proportionality. Okay, thank you. Okay, I'll move on to the next question, which is under the sort of heading fair value. And I know you've touched on fair value, Matt, but this is quite a sort of an interesting sort of take on the product value assessments. So it's a long question, so I'll do it slowly, but I think it is worth reading it out. So with regards to product value assessments, when will the FCA get granular with their work to ensure that a policy meets the objectives of the consumer duty? So for example, whilst a class of business, and in this instance it was referenced product liability, isn't in the crosshairs, what regulatory actions are proposed to prevent unfair exclusions being applied to individual policies? This member has seen examples where a provider has determined that the product provides fair value, but the exclusion endorsements applied at individual policy level practically strips out all the protection.
Okay, so
Excuse me.
I can't. So if we follow that through, what would that mean if we were to do that? It would mean reviewing every product that is sold on the market. And so I'm responsible for 6,000 firms, insurers, brokers, MGAs. I have about 120 people to do that. The maths of looking at every product that's sold, even for one large firm, that's not going to be feasible. So what we have to do is to see where is there the biggest harm, where is the biggest risk, and we receive things like whistleblowing. We look at your regulatory returns that come in. We look at reports from the Ombudsman and many other sources of intelligence. And then look at where the biggest harm is and make our way down the list of those are the things that we're going to focus on. My suggestion would be to whoever sent in that question, if there are specific products that they're concerned about, then tell us about them. We can do it anonymously, but actually feed in that intelligence, and then if it's a type of if there's potential for harm, if it links with other things that we see kind of coming in to us, then that's where we'll look at individual firms. But I mean, if we go back to some of your other questions that we've had, it's been around how do we do things where we see harm versus kind of across the board. Yeah. I don't have the resource to get in product wordings for every product in a certain market. And unless it's one that's kind of very small or where it's causing really significant issues to focus on. We're doing a massive piece of work on motor insurance at the moment that doesn't involve reviewing all of the wordings of every firm, but looking at different aspects of how the sector is working. So if you have a specific concern about a specific policy, please let us know. But otherwise, if it's causing harm, I would expect it to trigger by some other of our routes as well, including complaints data, financial ombudsman data, and upholds around those as well.
Thank you. Any observations or sentiments? Anyone got any experience of what appears to me is like a smoke and mirrors, where you have this product and then you basically strip everything which is fair value, and then you strip everything away which the customer actually expects, and then at the end of the day it's not fair value at all? It seems a complete lack of integrity to me, if that's... John?
Yeah, I think when consumer duty and product definitions first came out, we had this discussion, say, on package policies for small contractors, where the standard policy would exclude hot work. And, is that fit for purpose for somebody who's likely to do something that involves heat? And I think that's an example your colleague online is getting to, where there's an exclusion applied, so the product itself would pass a fair value and target market assessment. It isn't fit for purpose. Just to clarify that point, really.
But I mean, in that example, for example, it's not really meeting the target market, is it?
Well, it gives them an insurance product, but may not work in certain circumstances, and it's whether that's explained clearly enough.
Yeah. Well, one would hope that it was made clear. I mean, we see this in professional indemnity insurance, for example, as a product kind of quite a bit, where the exclusions, the kind of significant exclusions included that make it not provide the requirement is people have PI insurance, but actually the product that's provided isn't meeting those. I think we've dealt with quite a few examples of that as an example. But again, those kind of come from intelligence being raised by people raising concerns about specific products, and then us taking action on those specific ones as part of our as part of our reactive work.
Okay, thanks, John. Okay, so we've still got about 15 minutes or so, so I'd like to open up sort of both to the room and those online for any questions. So I'll start with the room. So who would like to put their hand up? David? For those of you online, please submit your questions.
Yeah, I'm sorry. I did put my hand up as chair and said to the people if they wanted to submit anonymous questions to you, Matt, and I would do so as chair of the committee. So unfortunately, I have 3 questions, so apologies to the room if I'm hogging it briefly, but I'll try and get on with it.
I may cut you off, David, if you can, but carry on.
Well, I'm still not as short as you, Mike. First question is, we've all heard about the car finance cases that are currently going through the Supreme Court. For those who haven't seen it, the Court of Appeal had a big bash on undisclosed and partially disclosed commissions last year and said illegal. I was pleased to see actually as of yesterday that the FCA have said that the Court of Appeal went too far. My question that was proposed to me, have the FCA any plans to issue any consultation as regard to commission disclosure?
Thank you. So what you won't know is I'm actually leading the FCA's work on motor finance on the side of.
I wasn't aware of that. Sorry, Matt. I don't think the question was.
No, I'm not allowed to. Obviously, the Supreme Court case is happening as literally as we speak, so I can't speak about that. But our view is that the case is specific around motor finance. And yeah, the judgment of the Court of Appeal, and it's been heard around at the Supreme Court, is around the sale of motor finance policies alongside vehicles, and that is what it is about. And so that our work around it is focused around that product and that market.
I think that sort of answers the question for now, isn't it? We'll see what the Supreme Court say in midsummer, I suppose. The second question I was posed was, and I did see the survey, a recent broker survey was strongly in favour of the wholesale MGAs being regulated separately from the brokers. A, do you agree with this? But B, is this currently in the FCA's plans, bearing in mind HM Treasury's pressure to deregulate the wholesale space?
I wouldn't say the Treasury's pushes to deregulate the wholesale space. I think our focus has been our objectives for treating customers fairly and making markets work well, and to really delineate between consumer business and helping those markets work as effectively as possible. So the area, what we're interested in is focusing on where is there harm, where's the harm that's occurring, and how does that impact our objectives, and where markets are functioning well. Actually, there's no need for us to be on the pitch. Areas around bribery, corruption, non-financial misconduct, those remain very important parts of the FCA agenda. And via our enforcement and other supervisory things, we'll continue to focus on those issues. But as relates to how or where people are supervised, I think what you'll experience is if you are in a wholesale-only business, our work plans in insurance space certainly will continue, as they have been, to actually be significantly more focused on the retail side than on the wholesale, and I think that will continue. So our rules and any new rules and consultations we're doing are around how we make it easier for those businesses to be clear as to what rules don't apply, and disapplying rules where necessary, where they've overstepped and become too onerous, which is, that's what, as I've said before, that's what's happened around the consumer duty. Starting applying to some of that wholesale business.
I think there's a certain frustration that about 85% of the premiums written through our members is on a wholesale basis, not the retail basis. And yet we're asked a whole bunch of questions that just solely relate to the retail space, which is just frustrating and wasting time and money, to be honest. I think that's where the question was based.
Okay, well, back to my thing. If there are things that you're getting in terms of regulatory returns or other things where you think, actually, this is irrelevant and shouldn't be given to these businesses, then that's the conversation I'd be really keen to have.
Thank you. And the last one, I think it was half pointed at me because I spent quite a lot of my time down in Gibraltar. But since Gibraltar's now 44% of the UK motor market and growing in travel and pet and everything else, when is the GAR, the Gibraltar Authorisation Regime, going to be approved by the FCA? Because there's a certain concern that it's actually just annually renewable, which isn't very satisfactory for the retail market.
I think it's a matter for the Treasury. Rather than, it's not the FCA.
No indication from Treasury when it may come in?
So it's not for me to talk to that point. But it's an area where we, as the conduct regulator of the UK and who is responsible for where products are sold to UK consumers, irrespective of where that insurance comes from, we will retain a very close interest in how consumers are treated.
Okay, any question? Yep.
Oh, yeah. So you've touched on this already. You've kind of skirted around the edge. I was wondering if I could maybe push you a little bit further on it, which is the difference between SME and what's going to be inside and outside the scope of consumer duty. So you thinking that's going to be the FOS line, where you talked about before? Is it going to be a new line? Can you give us a better indication of where you're minded at the moment?
So we did this industry, London Market, the trade association, LMA, LMG, MGAA, BIBA, all very clear where they want the line, which is a consistent one with the FOS line because it's easy. The reason we did a discussion paper last year was we heard the industry view. We didn't have as much view of small businesses because what's important is that to understand where the level of sophistication, what the other side of the argument is, which is why we did the discussion paper. I think it's fair to say we've got some views. The consultation paper will set this out more clearly than I will today, but I think there wasn't a significant level of evidence that was submitted to us as to why that wasn't an appropriate level. So that's likely. I'm couching it because it hasn't gone through all the internal sign-off to get published yet. But I think it's quite likely that it will be in line with everybody else, with the Ombudsman. But don't hold me to that. But I think it will be.
There's a question at the back. Ali.
Hi, thank you for coming, and apologies if this isn't the right forum for this, but statistically firms with more diversity are more successful, and given the goal to empower growth and success within the market and also to address the talent gap that we're currently facing, why did the regulator choose not to move forward with their DEI consultation?
Yeah, it's a good question. When we consulted on it originally a couple of years ago, I should say first of all, we firmly believe that diversity of thought, of background, of everything is really important for all the reasons you say to result in better performance, better firms, better places to work. When we consulted a couple of years ago, there wasn't legislation kind of around this or areas when we were able to, there was a kind of a relatively green field for us to play on. When this government was elected, one of the things that they have proposed is a whole load of reporting, not just for finance, but more broadly across all industries to report certain metrics around certain levels of diversity. And as a result, our rules feel duplicative of efforts that the government are making in the same space, and therefore we didn't want to add to that burden, but we're relying on what the government is also doing in the same space. So this is one of those examples of we haven't changed our interest, our desire, our views around DEI being massively important. Separately on kind of some of our work linked to non-financial misconduct in the space, continuing that work, which we see is really important as well. But we feel we can rely on things that have already been done by central government that have been introduced in the time between when we consulted and now.
Thank you.
Okay, thank you. Good question. Any other questions in the room, or Kenneth?
This is the one I came in with earlier,
Yeah.
Matt. It is an easy one. So every year we do an event for a briefing for the MGAA for its members on the FCA annual plan. And every year we have no indication of when the plan is coming out. Now, to be totally transparent to you, we also run a book on the day it does come out. But can you give us a clue so that we can prepare our briefing, or at least prepare for the briefing as to when the annual plan may be coming out? It's usually April.
It is April.
Thanks.
Well, it's not May or June, Kenneth. So
Yeah, exactly. I mean, where are we? You might, yeah, exactly.
5 more minutes.
Yeah. Well, no, I know. I was more.
Oh, you're looking
the
at
date.
things. Okay.
Trying to.
So soon then.
I don't want to. I don't want to ruin your book. I mean, that's but imminent.
All right. Okay. Yeah. He's going to change his bet now when he goes back. He's going to. Okay, we've got the last few minutes or so. Any more questions, even from online or in the room? Okay, well, I've got one, so I'll be a little bit selfish as I'm moderating. So Matt, looking at the recently published 5-year strategy, what are the plans to strike the right balance in now embracing new technology, obviously including AI, against the obviously previous significant risks and concerns, which obviously the regulator sort of shared with the market?
So what's our view on AI?
Well, no, more striking the balance, because obviously looking at the 5-year strategy, the phrase, around embracing new technology.
Yeah. Oh, I see.
Forward, where previously there was considerable concern around the impact on customers around the use of AI. So I'm just trying to see how you can strike that, how that balance is now going to be struck.
I think our view on AI is we've kind of clarified it quite a bit in terms of we've moved on from days of quill pens. We don't have rules that say around use of a laptop. With AI, it's a way that businesses can be more effective in doing certain processes. And AI is changing what AI is changing all the time. As well, any rules that we might write will be out of date by the time. And I'm not talking about the speed of the FCA. It's changing so quickly. So we are agnostic to the technology that any firm uses, as long as it complies. The firm continues to comply with our rules. So, for example, anyone who sells insurance has to ensure that their product is not discriminating against protected characteristics. Just because you use AI doesn't mean that rule doesn't apply anymore. You still need to ensure that you meet those rules. As long as you can prove that it does, fill your beats with how you do it. So our aim is to be as agnostic as possible, but you still have to understand, if you're an underwriter, how the risk is being priced. I think in terms of certain processes, there can be real benefits for using AI, whether it's kind of co-pilot for writing meeting notes or whatever. But so how you use it in a safe way is for every firm to decide, and we're not going to be coming along saying you can't use it for doing this, or this, as long as you can prove that you are complying with all of our rules.
Okay. Any observations on that in the room? Obviously, MGA is, far more agile and probably ahead of the curve in terms of using AI, but presumably, providing it meets what Matt's described, then everyone's comfortable. Okay. I have one more question, but I will default to anyone in the room or online before we close. Okay. No, there we go.
Thanks. You've been talking a lot lately about commensurate fees and charges. How do you define commensurate?
How would you define it?
Well, that's the question, because you take a cost, you're going to make a margin, right? But what's a reasonable margin? Is there any other industry, apart from maybe financial services, that are having to justify their margins?
Is anyone making you justify margins? You have to justify. So, in my view, you have to look at what is the service you're providing, what is the value you're adding to the sale of the product. Now, whether that's advising the customer, whether that's being able to access something they otherwise wouldn't be able to do, and you price accordingly for that transparent margin, not margins, pardon me, transparent cost of doing so, I think is fine.
But when an insurer's doing a fair value assessment, a broker or an MGA isn't going to want to turn out their pockets and give them all the information about their own profitability and what their costs are, because everybody wants to make a buck. So what is the solution to that for an insurer to try to get to the bottom of those fair values and justify the costs or commissions?
So I think if you create a product at the start, you have to understand what it's been sold to the customer at the end. A product can start as fair value, but if you have multiple links in the chain, the product that the customer gets at the end may not be. So you might, a product that costs, I'm going to ruin this with maths, let's try and use a number, 100, and the likelihood of claim and the amount that they get in a claim is greater than that. 120, say, but then you add on all of the various commissions, and so you get to a stage where actually what the customer eventually pays is 300, but the most they can get in a claim is 120. It makes it a pointless product. It's a silly example. So how do we ensure that? How does the insurer or the start of the chain recognise that actually that product doesn't offer value once everyone's taken that chain? Actually, then either the distribution chain is too long, or and should be shortened, or the product is unviable if that's how much it costs to distribute it. I think what's important is everyone to understand what is the cost and the value they are bringing to that product being sold.
But if there's space to pay 40% commission and hits 40% customer payout, 10% in claims costs, and some profit for the insurer, firms are being asked to justify the 40% in commission. How do you justify paying the 40% just because you can afford to?
Well, it depends on the price of the product. If it's a £10 product, insurance product, for example, then £4 isn't very much. For example, if it's if we're talking £1,000, then it becomes more of an issue. So percentages can be kind of confusing around that, but if the product didn't exist, if there wasn't, if there wasn't a way of distributing the product absent the broker, and the cost of the broker providing that service is the building, the advice that they provide, etc., you'd expect there to be some logic that goes into why 40% is the right number. We need the insurance sector to make money. An insurer that doesn't make money is not going to be able to look out for its customers in the way that we would expect it to be. So we want the insurance sector and firms to be profitable, but they also need to be providing a service to justify why they're why they are doing so, why they are there. It's a longer debate than we've got time for.
Okay, Matt, if I may, I'll just have one question online, then I'll close, if I may. So it comes back to the consumer duty again. So under the consumer duty, can you talk about good practice and expectations? I think probably just some reassurance here for how MGA firms that, again, do not deal direct with end customers, but can better demonstrate good outcomes under customer understanding and customer sort elements. So again, it's that reach piece.
So I think there's one of the things that I'm keen that we do, and we'll do it to an extent in our simplifying insurance, I hope, consultation, but I think there's an area we need to do more on is across the distribution chain, what our expectations are at the different parts along it, and how it all comes together, because everybody doing the same thing doesn't make sense.
And it's cost.
And it costs a lot of money, right? But so how do we need it, it needs to be done. It is important that somebody does it and someone has responsibility for how that works. But how can we do it without duplicating it at every different stage along the chain? And some of it is, dare I say it, a misunderstanding of what the rules say. And so it's for us to be clear, actually, firms, this is actually what we want you to do. Some of it is rules pulling back a little bit and clarification of those. But there's we hear that that's an issue, and I'm hoping our forthcoming consultation, as well as a number of seminars we're going to be doing over the next couple of months. I should have said this earlier. We're doing a number of seminars over the next few months on fair value assessments, and myth busting, or being clear as to what they are, that we'll be publicising through our Reg Roundup, and we'll make sure you have all the details of as well, because this is an area where we think there's more we need to do to make it clearer.
Okay. Well, look, I'm going to close the session here. Thanks to all members who submitted questions. Thanks to the questions in the room. A very insightful session. Again, thanks very much, Matt, for sort of taking the time to come and talk to our members. You know, it's very, very well appreciated, and we will continue to have these sort of sessions. So just in closing, if you could please sort of show your appreciation for Matt, that'd be most welcome. Thank you very much.